secondaries on the risk spectrum of private markets is on the less risky side of the spectrum. So if you were to draw the private market spectrum on the risk curve, the most risky sub-asset class is the early stage venture asset class, which has the capability of generating tremendous amount of binary outcomes. The secondaries is on the other part of the barbell, which is the least risky part of the spectrum, in the same lines as private debt to some extent, right? And there, what we are thinking about is risk-adjusted returns that match other sub-asset classes.
Right.
So if you think it from an asset allocator or investor's perspective, it is a good balancing allocation to the early stage venture allocation they might have.
Right.
The other piece of the equation is that secondaries also balance out on duration of cash flows. In the early stage, seed, growth stage, your cash flows or the distributions that you get from your managers are out in year 10, 8. In the secondary asset class, these are 7 to 8 year life funds. We start talking about 5-year type duration for returning capital back to us. So it is to some extent a balancing act from the risk perspective and also on the duration side. In the Western world, anything from 20 to 30% of the private market assets is now being allocated to secondaries.
Yeah, so I think this is, first of all, this is one of the best opportunities today to be a secondary player, of course with the right skill set. Like in the West, you had 10% of primary as secondary. So primary 1 trillion, secondary 100 billion, right? That's the size of the market. Right.
Now in India, what we are seeing over the last 7-8 years, overall there is about $400 billion of investments. But over the last 6 years or so, it's about 50 billion every year.
Right.
Which means the secondary opportunity is likely to be around 5 billion every year. Right. Now, even if this stays at 5 billion every year, what you're looking at in the next 5 years is a 20 to 30 billion investment opportunities.
Right.
Now, maybe not every transaction will get done, but still, this is a $10-15 billion market for
right.
the next 5 years. So, reasonably large opportunity. And look, ISF, we are just starting out, and we are raising a $150 million fund. But both of us are focused on building India's premier secondary institution. Now, I don't want to say where will I be 5 years later, but the goal is to create a legacy in the secondary private market ecosystem, not just for 5 years, but maybe for my entire lifetime. And I think for Avneet's entire lifetime as well. So the next 20 years, I think we want to devote to this. Only time will tell, but there are enough examples that firms which started in 1990s in the US with $100 million, $200 million fund are now doing $8 to $10 billion fund.
Wow.
Right? So who knows what happens? Big opportunity. We will try to do our best. But I think it's a great opportunity to be in this space, and it's a very large opportunity to play in. The GP-led transactions come across as a wide umbrella under which there are several sub-assets or transactions. The one thing that we are always concerned about is to make sure that we minimize conflict of interest. GPs are put in this somewhat of a tough situation where they're representing both an existing LP set that are sellers, right. and they're also looking to take care of the new set of buyers that are coming in, whether they're secondary funds or new LPs.
Right.
In order to alleviate some of the conflict of interest, it's very important that they roll up their entire GP commitment and also imputed carried interest into the new continuation vehicle. That helps in bringing down conflict of interest to some extent. The other part of the equation is to think about, you talked about sponsor quality. It is very important for us to see if the underlying GP will have additional funds in addition to the continuation vehicle. If the continuation vehicle is the only fee generating vehicle for them, there might be a tendency on behalf of some GPs to elongate the exit process. Yeah. And hence, if they have other funds or if they have line of sight of other vehicles that they will raise, then our exit focus discipline does not go away.
Got it.
Aakash, you want to talk about?
Yeah, maybe a slightly broader context. So GP-led secondaries, first of all, GP-led secondaries is a wide umbrella.
Right.
And within that wide umbrella, there are different kinds of transactions that happen. Conflict of interest is relevant only for a particular transaction where an existing GP is rolling over to continue being the GP.
Right.
Because GP-led secondaries also mean full portfolio sale, where we are becoming the GP,
Of course.
right? There is a second part where there is single asset sale, where the GP is instrument in helping the existing investor get out and get the new investor in.
Right.
Again, there is no conflict of interest.
Right.
And then there is this continuation vehicle, which is where one has to be very careful about whether the GP's carry is getting rolled over or not,
Right.
whether the capital commitment is getting rolled over or not, etc. And yes, I think while people say that everybody can do secondary, this is a very different skill set, right? Because here you are dealing with people who are also investors, right? So you have to be very, very mindful of, and this is on a case by case basis. So you have to be very mindful, evaluate it from all angles
Right.
before you pull the trigger.
The one thing, Anshul, that secondary fund managers need to evaluate very carefully is that what will work better in that particular situation. There are some situations in which the GP relationship with the founder is such that it is not replaceable.
Right.
In those sort of circumstances, it's actually better to have the GP continue with that founder. Because for a secondary manager to come in and become the replacement GP, it will take a long time to develop that same level of relationship.
Right.
In certain cases, where the GP is fatigued because they've been with the asset for far too long,
Right.
there might be a scenario where a fresh pair of eyes are better.
I agree.
In that case, it is probably better that the GP departs and a new GP comes in.
Right.
So I think it's on a case-by-case basis whether we decide, that the existing GP is probably best suited to continue, or we come up, we talk about horses for courses, right, to some
Right.
extent, right? I mean, there are some folks that are very good at 0 to 1. There's some folks that are very good from 1 to 10. And there's some folks that do wonderful from 10 to 100,
Right.
right? So it's almost to that level of, judgment call that we need to take, whether in this particular scenario, should we continue with the GP or not? So
Right.
that's the lens that we use.